The Philippines and China have been forging stronger ties than ever before. Economic partnership may not be new, but the expansion of China's economy, along with the Philippines' continued promise to reject protectionism and open its economy, has led to billions of dollars worth of investments coming in from China. These are directed towards infrastructures, sometimes business cooperations, or, as some journalists like to point out, corruption money. Yes, there are various ways that Chinese have invested in the Philippines, but what is often missed out in the crucial news is company acquisition. Yes, that is right. There were times in the past when China actually acquired some form of stake in Philippine companies. While there are limitations in the Philippines constitution, there are still Chinese companies, even state-owned, that try to maximize the ownership as much as 40% as they are seeking. So how does this work? Where are the investments going? Which companies are being acquired? And will this be a caution for the future? Will, in the course of time, as the Philippines opens its businesses for full foreign ownership, will Chinese investments actually garble up much of the Philippines' largest companies? Well, let us see and find today's landscape. There are two dominant sectors where China's companies play a huge role in the Philippines. These are telecommunications and finance, and you may already know what these are. First on the list is in the realm of finance. Alibaba, also known as China's tech darling, has a huge presence in the Philippines. Through Ant Financial, its subsidiary, it has partnered with the country's largest telecommunication company, Globe. Globe and Ant Financial have developed close ties after the Chinese company invested in Mint, also known as the operator behind GCash. Yes, that is right, Ant Financial has a stake in GCash, the Philippines' largest and arguably the most dominant fintech service. This happened way back in 2017, when GCash was still relatively unused by the country. Since its acquisition all the way in 2021, Ant Financial has emerged with a 40% stake in Mint, where the other 40% is owned by Globe and the remaining is owned by other investors. But as you can already see, Ant Financial holds a stake that is vital to the Philippines. GCash is by no means just a payment service provider. It facilitates trillions and trillions of pesos in annual transactions, and undoubtedly it will continue to become a key player in the overall financial industry of the Philippines in the future. But you see, GCash is not the sole player here along with Alibaba. Alibaba also owns Lazada, which operates a huge market in the Philippines. E-commerce, a vital stone in the country's economy, as you may already know, is also majority owned by Alibaba. But unlike GCash, Lazada operates in Singapore. Nevertheless, it should already show just how important this Chinese company, Alibaba, is to the Philippines, being in touch with the country's e-commerce and financial services. Now, let's go on and discuss telecommunications. And no, it is not Globe this time. It is a company known as Dito Telecommunications, formerly known as Mislatel. When Dito Telecommunications won the bid to become the third telco provider in the country, many were surprised. Dito Telecommunications, as many journalists cited, had a favorable advantage. They had connections in the executive branch of the Philippines as claimed, and worst of all, they are also partly owned by a Chinese state-owned company known as China Telecom. China Telecom had several controversies over its lifetime. In 2021, it was even ordered by a U.S. executive order to delist from the New York Stock Exchange, and the Federal Communication Commission had revoked the company's operating license in the United States for national security reasons. Yet, this very company is a backer of Dito Telecom. So, how much do they have at stake? Well, the same as usual to maximize constitutional limitations, 40%. The good thing is that the remaining 60% is owned by Udena and Chelsea, which are also owned by Dennis Yu, a long-term Davao businessman and a good friend of former President Rodrigo Duterte. Well, does any of these sound alarming to you? Chinese-backed Telecom, a friend of Rodrigo Duterte, winner of the bid where several other players had been competing to become the third telco. Well, that is the controversy behind this investment. But regardless, this has even brought the armed forces of the Philippines to investigate the company to see if it will harm the country's national security. But according to the company, they have already received their security audits. Since then, Dito Telecom's growth has been massive. They now have millions upon millions of subscribers and growing. Now, if these two stories do not show just how big of a presence in the Philippines China has, well, you may be shocked by what we will discuss next. The first is Power China. Power China, like China Telecom, is a state-owned company. They currently currently hold several deals in the Philippines for power-related deals. In fact, one of them is the 500-megawatt Wawa hydroelectric project, a deal worth over $1 billion. But Power China Philippines has also been met with several controversies, as highlighted by the Philippine Center for Investigative Journalism. On top of Power China, people also know about the National Grid Corporation of the Philippines, a privately owned corporation that maintains and develops the Philippines power grid. Like the other deals, the NGCP is also partly owned by the State Grid Corporation of China. Many controversies surround this deal as well. Some even stated that they can shut off power access in the Philippines if they wanted to, but NGCP declined that will ever happen. Now, these are just some of the big investments that occurred over the last few years, but these are by no means the only ones out there. It is known that Chinese investments have been coming in huge, especially since the rise of former President Gloria Arroyo, who introduced big Chinese investments in the Philippines, especially in the mining industry. So now we've reached a turning point in our story. We've discussed several big companies, but we will not discuss all the other smaller deals. Of course, they are important, but not as important as these. Access to financial services, telecommunications, e-commerce, power supply, and so on. For now, let's talk about another crucial part in all of these, the implications beneath these deals and what it can mean for the Philippines. The rapid influx of Chinese investments into the Philippines is undeniably changing the landscape of the country's economy. One of the foremost concerns is the Philippines' sovereignty. As China makes its mark in critical sectors like telecommunications and energy, questions about national security and data privacy arise. The NGCP China ownership, for instance, sparked debates on whether it posed a threat to the country's national security. Similarly, with Telecommunications expanding its reach, concerns about surveillance and data protection have surfaced. The Philippines finds itself at a crossroads, balancing the benefits of foreign investments with the imperative to safeguard its national interests. But beyond security, there's also the topic of economic dependency. The Philippines, with its emerging market status, stands to benefit immensely from Chinese investments. Infrastructure development, job creation, and technological innovations are all on the cards here. Yet there's a fine line between collaboration and over-reliance. With China becoming a significant stakeholder in various sectors, the Philippines needs to ensure that it doesn't become overly dependent, maintaining a diversified investment portfolio. Following that, it is also important to know the entry of Chinese titans can overshadow local competitors, making it tough for them to compete on scale and resources. Chinese-backed telecom venture Dito Telecommunications, for example, quickly gained ground with a whopping 5 million subscribers. Having one of the world's largest telecoms to back Dito may lead the company to become far larger than both PLDT and Globe Telecom one day. While some may see this as a bad thing, it shouldn't really be all negative. Competition is vital for an industry to become innovative. The more competition there is, it is likely that the internet connection in the Philippines will become efficient and cheap. But regardless of possible challenges, there are still benefits to the fray. Of course, the arrival of Chinese firms has led to job creation in sectors like telecommunications and infrastructure, offering Filipinos new avenues for employment. Chinese firms may also bring their own technology with them, which is then passed on to the country. Their standards, which may be met with controversies, is still something to follow, and it is also important for Filipinos to understand that. But anyway, do let us know what you think. Thanks for watching.